afternoon, Outliers. Happy Friday. How are y'all doing today? I hope today has been an incredible day for you, right? I really do. I hope that every Friday and every other day that we get to meet together turns out to be the best day ever. I mean, every day is a good day when you get to be above the ground, right? Um, had the opportunity to go to lunch with my son. I love doing that. It's a special time, right? My older son, he's in middle school now, and I didn't appreciate the times where I could go and do things with him because I kind of thought they'd be there forever, right? But now my younger son, he's in fourth grade, and I'm like, man, I only got so much time left with him. It's one of those things, right? I tell my kids this all the time. It's like every year goes by so fast, and every day goes by so slow. So I'm glad that you are spending some of your day here with me. Thank you so much for being here. Michael says, Buenos dias, amigos. Tug is here. Hey, Chris. Howdy, everybody. Wes, glad to see you. And Randy, good to have you here, Randy. All right. We got quite a lot to cover today. So I'm going to jump right ahead and let's just get into it, right? Let's get started. Clicky, clicky, still clickies, more clickies. Oh, look at that. Welcome to the Outlier Trading Room. This is smart trading made simple. Save time, make money, start winning with less risk. There we go. And for those of you who don't know me, my name is Christopher Uhl. I've twice been awarded top 100 people in finance. I've been successfully trading since 2009. I am a partner with OVTLYR, and this is my style of trading using the OVTLYR, and I call it the golden ticket trading strategy. So real quick, how does OVTLYR work? It's a 4-step process. Number one, OVTLYR monitors how investors are reacting to changing market conditions, news, price movements, and the economy. Number two, OVTLYR determines if investors are acting irrationally fearful or greedy, and by how much. OVTLYR gives buy and sell signals when those irrational behaviors reach an extreme. And number four, that allows you to get into the stock before the OVTLYR move happens. So let's go over our member highlight real quick with our weekly winner circle. Now, the weekly winner circle is a ton of fun. Basically, all you have to do is go into the hashtag share your big wins section and let us know how you are using OVTLYR. It doesn't get any easier than that. Let's see. We have 3 people who are entered into this week, right? First is Tug. I went ahead and I posted something he was working on over into this area. Dave sharing a big win that he had in LUNR. And then Wes was talking about how he was using one of our strategies that we taught here about rolling up the calls in his Tesla position twice to lock in gains. Basically, it means he's long the October 18th 240 calls for an average price of 90 cents after taking credits on the way up, and only 90 cents is left of his original debit. What a great idea to roll up strikes I had never thought much about. Yeah, dude, it is so cool to be able to keep the trade on, yet take off profits right now and have capital to trade with right now. It's a win-win-win all around, right? And not many people know about this. So really glad I could help with that. Brian says, hello everyone, happy Friday. Brian, how was the first week at the new job, my friend? Or maybe it was the second week. Either way, how's it going over there? Dave, good to see you. All right, so the way that this works is I am going to assign each of you 3 gentlemen a number, 1 through 3, and then I'm going to go to a random number generator, and it's going to pick for me because I will not have a hand in this. So let's do that real quick. Let's go to random.org between 1 and 3. And let's just get a blank Excel. Tug says, rolling up is truly a great strategy. Dude, we want to give you everything you possibly can to succeed here with OVTLYR, right? So really glad that it's working out for you. Brian says, this is great. Drinking from a fire. You're drinking on the job, Brian? They trusted you. All right, Tug is going to be number 1. Who else was there? Dave and Wes. Dave is going to be number 2. Wes is going to be number 3. So the next time that I click this number here, when it says generate, okay, anticipation's killing me. The winner will get a $10 Amazon gift card. And like I say, it's super easy. All you got to do is just share with us how you're using OVTLYR. And in 3, 2, 1. Number 3. Lucky number 3. That goes to Wes. Congratulations, Wes. You are the winner of this week's weekly winners circle. April will send you that $10 gift card on Monday. In fact, let me do this. I'm going to type it in here. That way she doesn't miss it. My microphone's in the way. Congratulations to Wes. He is the winner of this week's winners circle. Way to go, dude. Tag April so she doesn't miss it. Brian says, compliance said I could not drink on the job, but if you're working from home, how will they ever know? Congratulations. And Wes says, thanks. All right, dudes. Glad y'all are here, and let's continue on. Actually, there was something in the general I wanted to discuss real quick. Brian was trying to get an idea of what we're up to. I said, I like you, but you're crazy. Where's that at? Oh, speaking of Wes, he asked about the color on the drop downs. So let's go over to that real quick. All right, so when you come to different parts of OVTLYR, you'll see drop downs like this one here. And you'll see that it actually has different colors associated with it. Those colors are associated with the background of that particular index. So for example, energy is red right now. Okay, so if we go to XLE, let that load in. The ETF sectors take just a moment extra to load. There we go. You'll see it's got the red overlay in the background. And the same would be true for, like I say, you can go to any of these now. You can see how this has changed a little bit on this drop down. You'll see different sectors. And like these have green backgrounds. This has a white background. So that's what that means, Wes. So hopefully that makes sense. Glad you asked the question. NR123, he's a new member. He or she is a new member in the Discord, asked about email notifications. And the way that it works is anything that you want to make a favorite, you just click the star button. This is taking far too long today. Sorry. There we go. You just click the star button, and then it moves over into your favorites list. And then anytime it gets a change in the buy signal, sell signal, or one of the background overlay colors, then you will get an email. In fact, today I got an email this morning on DIA, the Dow Jones ETF. But for example, you'll get an email notification when it comes to the sell signal. You'll get a notification when it goes to a white overlay. You'll get a notification on the buy signal and the green overlay and the sell signal, etc. So you'll get those emails, but it won't be like right now. It'll be the next time that occurs. And then M. Wiles, that's Michael, isn't it? Yeah, Michael. I thought it was. Okay. Michael asked about these little notifications up here. Those are the notifications, and they will be there until you go into the notifications area. And then those little icons on the stocks, they'll go away. Okay, and I did some back testing this morning. But we do have some really cool stuff coming down the line. Mahesh is currently working on a deal. He says it might be 2 weeks before I can make the announcement. But man, is it going to be what? It's going to be such a big deal. I'm so stoked about this. Sebastian made it. Hey, Sebastian, I'm not going to go visit you, unfortunately, in Munich. However, my wife is taking me to an Oktoberfest this weekend, which I'm super stoked about. She doesn't normally like to go to Oktoberfests. And I was like, this is great. You're going to be able to drive me home. I'm going to have a great time. So we've gone through all that. Hey, be sure to share your stories in the Discord. Like I said, every time you put in the weekly, what is it called? Not weekly winner circle. Share your big wins. Every time you go into the share your big wins section and share with us, that's going to enter you into a drawing to win a $10 Amazon gift card that we do every single week. And of course, the first rule of Outlier is to tell everybody about Outlier. And I know you're already subscribed, so go ahead and hit that like button for me. You guys have been doing an awesome job of really loading up that like button. So please continue to do so. It lets YouTube know to share these videos out with more people. And in the process, you're helping out more people by doing so. All right, so what I want to see is the 10 over the 20, price over the 50 in the market, which we do have here. We absolutely do have the 10 over the 20, prices over the 50. So this is definitely a bullish trend. We reached new all-time highs yesterday, and we've sold off a bit today. Not a whole lot, 18 basis points. We'll continue to see where that goes, but we are definitely in a bullish trend right now. Breadth, let's take a look at breadth here. And let's let this load on SPY, because we know that's going to take a moment to load. We'll go to breadth. Ooh, Brian says members only jackets for us all. That would be fancy. I like that idea. But no. All right, so on the breadth here, we do see that breadth is getting stronger. Breadth is all the way up to 59% already, right? So this is continuing to move up higher. That looks great. However, we still do have a sell signal on the SPY. Now we did get, I believe it was, so yeah, we do have a sell signal on the SPY. Qs already have, actually, let me go to my watch list. Qs, I think, already have a buy signal. And the DIA, the Dow Jones, already has a buy signal. Yeah, that came through today, the 20th, yeah. And Qs, but the SPY doesn't, right? And so that, for me, is that's a roadblock, right? That's what I want to see. So I want to see the SPY signal in a buy. I want to see the market trend being bullish, market breadth being bullish, and then the sector breadth when we pick a stock to also be bullish. We're not quite there yet, right? We're not quite there yet. We just have one piece to go. And of course, don't force anything, right? One thing that I wanted to actually go over today was Mark Minervini's rules. Mark is one of my trading mentors. I had the opportunity to work with him a few times. He is a bona fide market wizard and a really, really sweet guy. Like, you would be surprised at how like sweet of a guy he comes off as. But it's really funny too. When I started working with him, Mark looked me dead in the eyes and he said, I was explaining to him my trading strategy, and I laugh at this. I didn't at the time. I laugh at this because Mark looked me dead in the eyes and he said, Chris, this is why your trades suck. He was right. And yeah, I mean, it takes those it takes those days where somebody's brutally honest with you to let you know you've not been doing it right. You've not been doing things right. You need to shut up and listen. And so from that moment forward, I was like, yeah, you know what? I really do need to shut up and listen. Dude knows exactly what he's talking about. Tug mentioned he's lost the video feed. Has anybody else lost the video feed? Let me know. If you have, otherwise, if you have, I'll just cut it. But Mark is saying his 6 key trading rules. And I like to follow this here. Wait in cash for proper setups. How long? As long as it takes. Now, I know that you are probably wanting to jump in and put some trades on. I get that. I want to put some trades on too. But I don't see everything that I need to see just yet. And I like to go through this every single day because we don't know when it's going to come through, right? I don't know when it's going to come through. You don't know when it's going to come through. But if we show up every day, take notes, be market aware, we can see trends, we can see things happening, we can make assumptions in the market and then see how they play out without any risk, right? But we are taking notes, learning, making plans, and making preparations, because there are going to be days when things set up and we go hard and we go strong. And it's going to be awesome, right? Number 2, Mark says, always trade with a stop loss. Keep all losses small. We talked in the last few days about how important it is to position size based on volatility. We talked about that one on September 10th. Go back and watch that video. We talked about how to use the ATR indicator to help establish that stop loss for you. And so while some people may put stops in the market, I don't do that. I do stops on the chart. And consider it this way, right? When you position size correctly, you have a stop loss in your account. And what I mean by that is if you put 100% into it, you can't, you could potentially lose 100%. If you put 10% into it, the very worst thing that could happen is you lose 10%, which sucks. I'm not going to say it doesn't suck, but that's a stop loss to your account. Okay. So you put a stop loss in on the trade, you put a stop loss in onto the account, you keep your losses small. That's how you stay in the game. Number 3 rule, he says, is never get bold when running cold. Meaning, like, if things aren't working, right, stop forcing trades. And that's the real key he's trying to get here. Stop forcing trades, right? Take a step back, take a day off, cool off a little bit, and maybe even evaluate your data and say, okay, am I following my plan, right? Have I built in these losses? Does this make sense? Okay, because not every trade is going to be a winner, right? But that doesn't mean you need to start doubling up and tripling up when things aren't working. That's the quickest way to blow out your account. Number 4, nail down decent profits, right? Of course, we want to make as much money as we can in every trade. We can't always control that. But of course, one of my adages, I don't know where I heard it from, so I will take credit for it, is cut your losers short and let your winners run out of control, right? We want those big returns, but not every trade has to be a big return, right? If you stack 5 and 10% winners over and over, you're going to have tremendous returns overall, okay? You don't have to hit 100% on every trade, but you do have to limit your losses every chance you get. Number 5, never let a good size gain turn into a loss. I have been guilty of this. And there's one big change, and those of you who have followed me for a while, you have actually seen me make this change, and I'll describe what that change was. In the Turtle Traders book, they talked about how if a stock goes your way by 1 ATR, let's just use this as an example, okay? Let's say this is my entry point. Let me make it bigger. Let's say right here is my entry point, and price goes up. Price goes up like this, okay? And let's say that this is 1 ATR. Just for example's sake. And then it turns around and goes against you, right? That sucks, of course, but it does happen. What I was doing and what I actively changed about 2 years ago was, rather than every time it goes up to 1 ATR, doubling my position because it's already working in your favor. Doubling my position sounded great on the surface. Doubling my position was what the Turtle Traders were doing. But if it turns around like this, do you know what happens? All the losses, all the wins from your first trade, they're gone. And now you have losses from your second trade you put on. And that really sucks, right? There was a point in time where I traded like that. And that doesn't mean that it was wrong, but I identified I was not letting this work, right? I was not letting my good size, or I was letting my good size gains turn into losses. Because if this had continued on, right, I could have doubled my win. But instead of like getting out of break even, I was getting out, watching all my gains go away, and then having losers on top. And that really sucked. All right, let's move all these horizontal lines. Okay. Michael says, when we look at market breadth, what are some key insights to glean from the chart? Okay, great question. Market breadth. The way that I interpret this, Michael, is if this value is going up, that's the number of stocks on the bull list. If the number of stocks on the bull list is going up, that means more and more stocks are getting to the point where they have buy signals, okay? And if more and more stocks have buy signals, I'm interested. If more and more stocks have buy signals, mathematically, they have to be pushing up the market, right? If the market is... I'll be crude. All right, so I got a fat sack of cash out of my wallet. Let's say that the market is going up, right? And so you've got, hang on. Let's say more stocks are getting bought, right? So it's going up, right? The more stocks that get bought, the higher this goes, okay? It just goes up and up and up, right? So if more and more stocks are reaching that buy signal, then you could assume more and more stocks are going to be pushing the market up more and more, and buying begets buying, right? And so you're making a trend. And when you're making a trend out of the buy signals, you're watching as the market is pushing itself higher. Does that make sense, right? You're looking at all these pieces stacking together, which is pushing the market up higher, which is what we want to see. Same for not just the market, but also the sector. We want to see them both working together. Dave says, video's still good. Okay, good. Paul, hey, glad to see you. Market breadth. When OVTLYR is measuring market breadth, is it actually using S&P 500 stocks, or is it using the stocks approved for OVTLYR only? That's a very good question. I'm glad you asked that. So you have a couple choices up here. You've got full stocks, or you've got the ETFs, right? So this is everything OVTLYR covers, which is like 2,000 stocks. You've got all the ETFs, if you wanted to just look at the ETFs. And then you can actually filter down on the S&P 500 or the Dow Jones 30, right? So you can make that choice right there, my friend. I go with all of them. How high looking for breadth to be? One thing that I found, and in fact, I am the architect of the breadth indicator here, which I was very proud of. One thing that I found going through all this was something really interesting. First, breadth is so cyclical, right? And I like to measure things with the 10 moving average. As we discussed before, the 10 moving average is your short-term trend. So when you see it crossing over the 10 moving average, the short-term trend is going up. You see it crossing below the 10 moving average, the short-term trend is down, okay? That's why I filter that on. But it's extremely cyclical. Look at it just go like in waves, right? And sometimes the waves are smaller and sometimes the waves are bigger, right? So that's really neat. But what we found is the extremes are very interesting, right? When it gets at 25% or at 75%, and then, you know, above or below at that point, that's when you can see pullbacks happen. And the way that I look at this is if breadth has reached 80%, that means 8 out of every 10 stocks already have a buy signal on them. So our opportunity gets smaller and smaller and smaller. Our opportunity to buy stocks gets smaller and smaller because more and more people have already bought in. And if everybody's already bought in, Paul, what's left to happen? If everybody's already bought in, all that's left are sellers, right? And that's so interesting to me because we see this in the chart of the breadth over and over and over again. And this was an observation I made. Mahesh sent me raw data and I created this chart and I was like, wow, look at this, Mahesh. Every time we reach an extreme, we see huge pullbacks the other direction. So very, very cool. Brian says, Mahesh discussed this on his video. Ah, excellent, excellent. Yeah. Great minds think alike. Okay, let's continue on. And then lastly, I want to know in the chat, just type a number 1 if this has happened to you. Never add to losers. This is something that people consider like revenge trading, right? Or you could go to a stock like GameStop or AMC. Let's go to AMC. There's still the mother of all squeeze, they say, is going to happen on AMC, right? AMC is down like literally 99.9% from its all-time highs, which is absolutely hilarious. Oh my gosh, they've reverse split this several times, obviously. But let's say that you were so stoked about AMC and right, you're one of those people that bought in, maybe not at the high, but maybe the day before. And you saw it go up and you're like, oh my gosh, I'm such a genius. And then it goes sideways for a while and you're like, man, this is so great. I loved it when it was, this is reverse split adjusted, so $317. I loved it at $317, which at the time, I think it was like 10, either way. And then it goes on and sideways and it starts to go down. And you're like, oh, you know what? If I double my position size now at 300, then my average price is 308, right? And if my average price is 308, then I'll make even more when it goes back up, right? And then you're hoping and you're praying and you watch it go up and it goes up to 438. Man, this is probably not the best example. You're like, oh, I'm such a genius. I'm making so much money. And it's back down to 350. And you're like, okay, no, it's fine. I'm still at 308. All is good, right? And then the actual bottom falls out. And you're like, oh crap. Now it's down to 200. My average price is 308. So if I double up again, what would that be? 308 plus 200 divided by 2. Now my average price is only 254. I started at what was it? 300 and then or 317 and then I doubled up at 300 and I doubled up again when it's at 200. So now it's only got to go up to 250 and I'm profitable again, right? And then it just continues on and now it's down to 150 and it continues on. And it's it went up to 241. We're almost in the green. Now it's down to 100. And we'll just zoom out and yeah, now it's down to $4. Hey, if you loved it at 300, I bet it is the greatest deal of all time at $4, right? Yeah. There's no reason to do that. If a trade's not working out, do not start doubling up, right? Do not ever add to losers. That is honestly something that I don't know why, but that thought didn't cross my mind until I started seeing these rules and learning these rules about never add to losers. And I was like, people do that? So trust me, I've made many mistakes. Fortunately for me, that was one that I avoided, but that's okay, right? Michael says, OMG all the time, but you learn from it, right? You learn from it. Paul says, how much of a leading indicator is the market rep? Not sure what you mean by the market rep. I'll be glad to look at it. I'm just not sure about that one. Dave says, that was one of my early mistakes. Trying to dollar cost average on options was something that was a loser. CCL killed me on that when I first started. Take a look at CCL. Dude, like these moves in CCL are pretty brutal, right? I mean, I imagine you got in at $9 and then it went up to 19 and then it came back to 11 and then up to 19 and then back to 14. I could see people blowing out their account just trying to catch these moves up and down, right? That's brutal. But I also like to point out 10, 20, 50s. Just follow the trend. It makes it a lot easier. You could have traded this both ways and done really well. And good gravy, good Lord. You see those order blocks? Look at the rejections over and over again. There's one there. Rejection. Isn't that the coolest thing? I love me some order blocks. Oh, Paul says, how much of a leading indicator is market breadth? Gotcha. I don't have data on that, Paul. But I will say that I need to see market breadth moving for me in the same direction as sector breadth. That's what I mean by this, right? And then once those are in agreement on whatever stock that I'm picking, that's when I'm comfortable taking the signal in outlier. But by all means, that's just my style of trading. I like to preface this and say, you can trade any way you want to, my friend. That's just my style of trading. Dave says, I came in at 1650 on the upswing, mainly in options. Dollar cost averaged with more options without being long enough in length. So everything went down even fast. Oh, yeah. Gotcha. Everything went down even faster. Yeah, for sure. Speaking of things going down even faster, I want to share with you a video I saw earlier today. One of my Finance Bro channels here. Reventure Consulting. I don't know if you've watched this channel, but it's very good. I only want to play a couple minutes of this because I thought he had a really good point about the Fed cutting rates.
In a historic move, the Federal Reserve just cut interest rates by 50 basis. In a historic move, the Federal Reserve just cut interest rates by 50 basis points, suggesting that both the economy and the housing market are going to shift markedly over the next 3 to 6 months. In this video, I'm going to give you all the data that you need to know and understand as a home buyer, investor, or just someone trying to track the economy. Because historically, when the Fed cuts interest rates, everyone, that's the signal that a recession is on the way. Because 10 of the last 14 times that the Fed entered a rate cut cycle, we had a recession. Only 4 times.
Okay. So 10 of the last 14 times we've hit a recession, he says. I don't know this data. I'm just going based on what he says. So the fact that we're cutting rates now, I don't know. I mean, but realistically speaking, who hasn't felt like we're already in a recession, right? Who hasn't taken a look at prices on the shelf and be like, whew, I think I'm going to go with the off-brand mayonnaise this week instead of Hellman's or Duke's, right? Who hasn't taken a look at the cereal? The best example I ever gave for just how much inflation had gone up, and this was like 2 years ago at this point. I can't imagine what it is now. I don't buy the groceries, my wife does. Good thing, because I would have a panic attack every week. Was I went to Walmart one day. I was craving Fruit Loops, and I bought 2 jugs of Fairlife milk and a bag, not the box, the bag of Fruit Loops, and it was $17. And I was like, I just want milk and cereal, and I had to spend $17 for this? This is unbelievable.
Did we dodge a recession? And what a lot of people make the mistake of with Fed rate cuts is they think actually it's a positive for the economy. For instance, check out this article from September 2007, right before the great financial crash. This article reports on how on September 18th, 2007, 17 years ago to the day, the Fed cut interest rates by 0.5 percentage point in an attempt to help the economy. And look at what happened. Stocks surged following the announcement. The Nasdaq shot up 2.7%. The S&P closed 3% higher. This is a good first move that will give aggressive confidence and aggressive relief to credit markets and the consumer. And the stock market actually continued to rally, folks, through October 2007 after the Fed did that 50 basis point cut 17 years ago. And why I'm giving you that example is so you can understand what we're seeing today mirrors very much what we saw at the beginning of that last crash, and that the people who are getting overly excited that a Fed rate cut is somehow going to mean that asset markets are going to go up forever and the economy is going to avoid a recession. These same people existed 17 years ago, right before Lehman Brothers and right before the biggest housing crash of all time. Now, that doesn't guarantee that we're about to see a repeat of 2008. We, of course, need to look closer at what's going on in the economy, because one of the benefits to Fed rate cuts for the economy is that borrowing gets cheaper. Interest rates go down, mortgage rates go down. Mortgage rates are already down to 6.1%. The cost of borrowing a loan for a car goes down. Credit card interest rates go down. So those things will help consumers. However, the early returns, when I polled you guys on if these rate cuts are going to matter, are not so positive. For instance, 6 days ago, I polled you guys and asked, mortgage rates just dropped to 6.1% in anticipation of these rate cuts. Does this make you more likely to buy a house?
Yeah. So to his point here is that he polled 19,000 people on his social media, and 91% said, nah, the rates are not low enough for me to buy a house. And I mean, I get it, right? That even with a 50 basis point cut to interest rates, that house you want to buy, it still has appreciated like 2x in value. It's nearly doubled in value in the last few years. And just because you can finance it slightly less, that is not enough to move the needle. So to his point, I don't know if he's going to be right that we're looking for a huge crash. But it is interesting to see the correlations here, right? It is really interesting to see that nearly 17 years to the day, we also got a 50 basis point cut. And then the bottom broke out, right? All hell broke loose, right? I was graduating college with my MBA around this time, and I was so completely like out of touch with what was going on. I had no idea just how bad things were, and it didn't go very well, right? It was a really, really tough time. So I'm really hoping that we don't see another repeat of 2008. But you know what? We got to be prepared for it either way. So I appreciate him putting out the data on that. Let's catch up on the chat real quick. Dave says that's where he learned about theta. Yeah. And Dave, that is why when I go to trade, I try to trade as little theta as possible. Randy says he's been buying a lot of great value. Me too, my friend. Citigroup went from $55 to 96 cents. Brian says, great movie. Dave says, oh, there it is. I think it's funny that they are basing the recession on 2008 on the rate decrease. Very oversimplified, of course. Yeah. Watch The Big Short. It was a great movie about what really happened during that time. Dave says, it really is, Brian. I work in land planning and development in Arizona, and I felt this firsthand. Brian says, you also need to have the need to buy a house. Yeah, for sure. So that's going to wrap everything I want to cover today. And, oh, wait a minute. There we go. That's going to wrap everything I wanted to cover today. I really appreciate your time. Thank you for letting me spend some time with you here on Friday. And thank you so much for being an outlier. I want you to know that we literally could not do this without you. And we want to pay you back every single day by helping you save time, make money, start winning with less risk. And don't forget, we are raising the price on our annual plan next week. So if you haven't already got an annual plan, it's literally 82 cents a day. I would highly, highly, highly encourage you to do so before we raise our prices. And don't forget, hit the like button. I know you're already subscribed. You guys are doing an amazing job of hitting that like button on every single episode. So please continue to do so. It lets everybody else know how great it is to be an outlier. Have a fantastic day. Have an incredible weekend. And I'll see you right back here on Monday. Talk soon.